And good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 being recorded on Tuesday, September the 23rd at 2:50 p.m. Pacific Daylight Time. Kind of a crazy day. I was kind of looking for that we had the chance that we either had finished the fourth wave, we were going to dip a little bit lower, and you can see that it did come in way lower. And so I had to make a change. And so I kind of came in. This is 50 to just below 618 overlapped wave one. So let me take that off. And actually, don't do that. Just kind of remove it. And so what I've done is that I've gone back and I spent a lot of time this afternoon just kind of looking at from the daily chart to the hourly chart to the hourly 30, just all the way around to see, what my possibilities were. What is the market really letting us know? Because initially I thought, okay, it's a 3-3-3, so we're in a diagonal, and an expanding diagonal at that, within this fifth wave position. And so um, that is acceptable, by the way, that expanding diagonals in a fifth wave position are not, they're common, they're not uncommon. And we can find them often. And basically what it also tells us is that they occur when a market is getting exhausted. And I think we all are kind of getting exhausted, but the market continues to walk itself higher against, what some people may say are odds that it shouldn't. Regardless of the underlying factors that are in play here, which I tend to lean more on, it's actually the options trades. It's actually how things are trading, where gamma and other levels are being determined and placed, and how the big money is kind of being moved around and almost daily. And as long as it stays in circulation, then I think that the market's going to be okay. I think it's like we'll have plenty to trade. But it's kind of when the market would stop, in other words, where the money starts exiting the market. And that would be the time of true concern. But right now, there's still plenty. I mean, consider last Friday when we had the expiration that it totaled $1.1 trillion in the SPX. And those SPX options, which the bulk of that expired on Friday morning. So as long as that's kind of be, I don't want to use the word norm, but as long as that remains in place, then I think, there's plenty to do and there's a lot of trade. And, the market will continue to flow. Now, speaking to this upside, I think a lot of that again is just propelling forward as we get ready to go into the fourth quarter. Then we'll start dealing with year end. How do we start to look at things? We still have an earnings season to get through. So it's going to be, third quarter earnings and across the board. And so a lot of that's got to come out. And again, we're kind of going on how companies left it basically for the second quarter, going forward. And a lot of it that wasn't like tremendously bad. But then we're seeing a lot of stocks, a lot of companies just kind of perk up and start going again, and such as Apple, such as Tesla, such as Nvidia, and et cetera, et cetera. And basically, even the banks are pretty healthy. The banking system is healthy, et cetera. But what we had today and what it really kind of started with is that Jerome Powell had a speech. And in that speech, he talked about that hiring is slowing down, um, and layoffs are not as heavy as they were, but there's not as many people being hired, either. So that can have an effect on the different things that they look at as to whether we need to cut rates or raise rates, or how do we handle inflation, or how do we do this, and that's their job. So, and then also when asked, not that he said they said that the Fed The Federal Reserve does not monitor the stock market, but he felt that equities were getting a bit um, overbought or up there, overvalued. Yeah, there you go. It took me a while to find that word, but that's what he said. He said the market does appear to be overvalued. And pretty much when he said that, we started to just tumble. And as a day trader, I mean, it was all right in here when we look at it. And it doesn't look all that bad, right? That doesn't look all that bad, no matter how you look at it. But I can bring it down and shove it on a 5-minute chart and put it out like that. Yes, it did. And so, really, in this is where we saw in the Qs now. So, in the triple Qs, let me just kind of open that up a little bit so I can see. You see, they ended up at 598. At 600, we were breaking. I have to go back. I'm going to look. Stay with me 1 second because I want to be correct on what I'm going to say. So at 600 was large gamma 1. 599 was the volatility trigger where we closed at 598. So we broke back down through large gamma 1, and then pretty quickly we broke the volatility trigger. And when we broke that volatility trigger, it was like up. We were down here, and we just kind of went slide, and then we slid because within here the S&P, the spiders broke their volatility trigger. Now, what else did we have here? We were not up above the call wall, but as we were coming down, we went through in here in the NQ. We also went through the volatility trigger, which was at 24,856. So here's where it was. And so I was telling you, in that bar, we broke the volatility trigger and it slid. And then it slid. And that is what happened when you go through a volatility trigger, which begins to dictate don't be doing any more risk on trades. It turns into risk off trades, and risk off trades are selling. Risk on is buying, risk off is selling, and that's the important thing to kind of remember. So when we break the volatility trigger on the way down, it's going to produce selling. And a lot of that's just adjusting in positions, granted, but it produces that selling, and then it can get heavy duty, which it did. And so I'm going to go back out. And that's kind of like a little bit of the background for today. And I spent a lot of time looking at what our possibilities are. Could it possibly be that this minuet fifth wave, it's done? And it would be put right there. And that would then suggest that not only is it minuet wave 5, but it's minute wave 3. And then we're coming down, starting into that larger correction, which I think can bring us back to here. That would be fairly large, right? We had that high at 25,025, and we have the potential to get down to 23,025. So what are we looking at? 2,000-point drop in the NASDAQ. That's pretty heavy duty, I think. That's a lot of trading, it's a lot of space, and it's a lot of movement. And so there could be a lot of just like get out of the way, get out of the way, get out of the way, because the sellers are just going to start to hit the market. As we continue to break down and go through subsequent volatility triggers, subsequent, gamma positions that just get taken out in both the Qs, the NQ, the NDX, the spiders, the ES, the IWM, the Dow, the DIA, which is the ETF for the Dow. There's a lot of things that will line up and will start to change if we get into that downside mode, which I am looking for, but I thought we still had a little bit more upside to do. And I think that is actually still the case. So again, we have the September 30th expiration. That's the quarterly expiration. It's next Tuesday. It's a week from today. I don't think that they're necessarily totally ready for it. I think today kind of shook the cage, but it may have already started. Yesterday was the buy adjustment. So a lot of the buying that was going to be done in preparation for next Tuesday and in preparation for moving into the fourth quarter. We saw that. Well, maybe today, excuse me, started where we were working on the sell side. What did they want to get rid of? Where were they rotating out of? And things of that nature. And then Jerome Powell made a speech. And that was not really well received. So we've just reopened in Globex, and the NASDAQ was up 19. Now it's up 16. So it's still going to be hairy, wild, as they settle into this. But my point also to that effect, if I bring it down to the 15-minute chart and I kind of look at how we were coming up, let me take this, put it in the line chart and take a look here. That's not going to work, is it? Go to the 5-minute chart and open it up. I thought that we had 1, 2, 3, 4, and if we can get up here and we get enough above that, then we have a 5 waves up off of that low. Let me put it back over to the bar chart. You can see it. 1, 2, 3, 4. We get up there and we can get a 5th wave in. So we got to get above 24,855 and hold above it. Now get it clean, get that clean 5 in. And it might be a decent sign other than this could be ABC and maybe not. So again, I'm just taking a look at that 5-minute chart, taking a look at the 15-minute chart, trying to just piece together. So if it is, and it's an ABC up, and we still have another round to come down before this 4th wave would be complete. And now, yes, you can see how I'm looking at that, an expanding triangle in the 5th wave position. And again, as I said, and I don't know if I said it here, but I know I said it on the S&P, that an expanding diagonal in a 5th wave position is showing that the market is reaching exhaustion. It's kind of being done going up. So there's these thrusts in both directions. And that's kind of what we're getting. And so what I thought here was 1, 2, 3. We did a little bit of a 4, not overlapping that. And then we could go up in a 5 and be done with this structure and be done with that 5th and be done with the minute 5th, a minuet wave 5, and come into that minute wave 3. Now, could that be being done for us? And that I need to reconsider, going back out to the hourly chart, that somehow here, that high completed this 5th, and the minute wave 3. And we're now beginning that larger 4th wave. It would be a minute wave 4, which could bring us back to this level. And as I said before, that's about a 2,000 point drop back down. So it's a fairly large move. And I think maybe that could take us right into the beginning of October. So it would really toss a lot of things around, I think, coming for that end of the quarter. But hey, we also like excitement. We would like to have a little bit of movement. We'd like to be able to step in and make some money. So we'll see. But the verdict is out as to whether it's either all done or are we actually going to put a wave 4 there, which I think I will. And so just kind of, yeah, just kind of go ahead and do it and see what happens. Tempt fate. And let me go like that and go here and put that down there. So what we're looking for is just that 5th wave up. And that's actually my marker again, 25,124, 25,125. Or just get above that high, 25,027, which we hit yesterday. Just get above there. And then that's going to be, as far as I'm concerned, A-OK. Then if it finishes this 5, this 5, and this 5, and the minute 3. So we get a lot to finish up and begin that little bit larger pullback. But I think maybe we have one more shot at it. If not, then I need to really take a look to see where things are going to shift, in terms of this count, because it's one way or the other, I'm going to have to make it all that this, not necessarily this will be changing, but the 5th, I got to get the 5th up there, this 5th up there, and this 5th up there. So primarily been looking right here. I was like, well, what the heck is going on? Or then maybe there's a possibility of this having to change a little bit. This is the 3 and this is the 4, and it's like, nah, that's the 4. That one just works a lot cleaner. So I'm kind of okay here. And so this is my area of focus. And so that's where I'm going to be looking. If necessary, right now, in an expanding, wave 4 can overlap wave 1. And it is by a fair amount. And that's fine. And that works. That's allowed. So we shall see. We shall see on all of this. So again, right now on the upside, we have 25,124. We've got some additional, but to be honest with you, after Jerome Powell's speech today, maybe they do come flocking back into the market and think, yeah, okay, fine, but we're still going to buy it. Possibly they do, but I'm beginning to think above 25,000, they're maybe not be so comfortable. But we'll wait and we'll see. We'll see how the money flows and where it goes. Now, as I said before, and I went over it, there were a lot of things broken today. We'll see how quickly, if they can be taken back. But more interesting to me will be where they get adjusted to. What will those levels tell us tomorrow? And will they spread out? Will, call wall be coming down? How will things line up? Now, also, economically on the calendar, we only have new home sales tomorrow. But we know that all the Fed people are out speaking. There's some forum going on somewhere, and that's where they're all showing up and they're all making speeches. I did read about it, but now I forget and I apologize. So on Thursday, initial jobless claims, GDP, advanced U.S. trade balance in goods, advanced retail inventories, advanced wholesale inventories, durable goods orders. And then we have a lot of the Fed people out again talking. In fact, 1, 2, 3, 4, 5 out talking on Thursday and all saying, speeches, speeches, speeches. And then we also have existing home sales on Thursday at 10 a.m. Now, Friday, personal income and spending and PCE index. So that would be the market movers, but more on Thursday and Friday. So let's see. Let's see what we can get done tomorrow. And that's actually about it. I don't think if I go, well, I'm just go on, let's just take a peek at the daily, see if it has any damage. And look at that. Yes, it's recognizing it, but there it is. It is still in alignment on the daily to go up. So the daily's registering today's decline, but they're not too worried. At least by the way the moving averages are looking. And on the hourly chart, yep, we got the 8 crossing the 20. We got the 20 heading lower. We got the 50 cresting and starting to go flat. And we got the 200 starting to go flat. So the hourly is registering a little bit more strongly. But you can see the coming in. We're kind of pushing. And I think we've got up there and maybe have created 5 up. But now we got to see, is that going to be an ABC? And we got one more little leg down, which would suggest that we come below the low here, which was 24,780. Still, we can still overlap wave 1 a little bit more, and not have too much worry about it. So let's kind of see what the market wants to do and what happens from here. All right, that is going to be it. Our next update will be tomorrow morning.